All right, lads. So just that question we worked on today in class. So I'll read you it as a video for you. Hopefully it works out fine. I yeah. Look, we'll just go ahead and do it. There's nothing too difficult in it. We got most of the workings done today. Um, so just try and finish them all off as best I can. So we'll try and get them fairly quickly for you as well, so it won't take too long. So just do the working. So our stock working. So that's our goods purchased on a sale or term basis. Now the accounting concept around it is the prudency concept, in that you shouldn't account for stuff on that basis until you bank the sale. So they should never include them if they're a sale or term basis. They shouldn't be included in sales. So this closing stock is 65.8. Okay. Um, Now included in that, I'm just gonna have to make this a little bit smaller. Sorry, just as you can see it. So included in that 65.8 is the goods that we bought on a sale or term basis. So we don't actually own the stock, so we need to take it out of it. Now the stock at cost is €4,000. 4,800 divided by 120 multiplied by 100 is €4,000. So we're going to take that 4,000 away because it's in our warehouse, but we don't own it. Okay. We're also going to reduce purchases by 4,000 euros. So our purchases figure is 675,500. So we haven't bought the goods, so we take it down by 4,000, and creditors also goes down by 4,000 euros. So we bought the goods for 4,000 euros. Doesn't matter what we're selling them for. The creditors need to go down by that 4,000 euros. So creditors starts off as 67,600, and we're going to take 4,000 euros away from them, and that's that done. Now, just above goods, it didn't take into account maybe goods sold on a sale or term basis, but then it would be stock, sales, and debtors that will be changing. Okay, so sales and debtors will go down by the sales price, stock will go back up by the cost price in that scenario. I think I showed you that in the incomplete record the last day. So working two is our normal depreciation working. So we're told provide for depreciation on an annual rate of 15% of cost from date of purchase to date of sale. Note, on the 30th of the 6th, 2016, a delivery van which cost 28,000 was traded in against the new van costing 36,000. So we go to our delivery vans. They start off as 102,000. You don't have the van anymore that you sold or that you traded in, so you take that away, and you do have the new van that you traded it in against, 36,000, so you add it on. So our delivery vans at the end are 110,000. Okay, so then when we depreciate delivery vans, it's 15% from date of purchase to the date of sale. So we had 102,000 for the first 6 months of the year. So we had the delivery van costing 28, and we didn't have the one costing 36. So I had 102,000 for the first 6/12 of the year, and that means we had the remaining 110,000 for the last 6 months of the year. All right, so that's our depreciation of delivery van. So we can work that out. By 6/12, and 15% of 110,000, also by 6/12. There. Okay, 8250, and we add the two together. That is 15,900. Okay, so our accumulated depreciation of delivery vans That started off as the difference between 102,000 and 76,000, because that's your cost and that's your value, and the difference between the two of those is accumulated depreciation. So that is, what did I say the difference? So the difference between 102 and 76 is, I know it's 26,000. All right, we add on our depreciation charge for the year, 15,900, I think, yeah. And then we have to take away the depreciation on the delivery van we sold. If we sold the van costing 28,000, we also disposed of its depreciation. So we have 15% of 28,000, and we had it for, we got it on the 30th of the 3rd, 2012. So we had it for 9 months and 12 months in 13, 14, and 15, and we had it for 6 months in 16. So in total, we had it for 36, 45, 51 months. So it's 15% of 28,000 by 51/12. We're getting rid of that. sorry. So that's 17,850 gets taken away. So your accumulated depreciation is plus 15,900 minus 17,850. 24,050. Okay. Your profit or loss on disposal, then you compare the value of the van that you got rid of. So it cost 28,000 and we depreciated by 17,850. So it's that sum there. So it's 28,000 minus 17,850, which will be what, 10,150. And we compare that to the allowance that we received, or the cash or whatever that would be received. So in this case, it's an allowance of 8,000. So that's a trade-in allowance. So we were given 8,000 for the van. The van's value was 10,150. That means we made a loss. We compared the two of them. We only got 8,000 for something worth 10,150. So that's a loss of 2,150. Okay. Then your usual one, the check for the net amount was included in purchases. So it shouldn't be treated as a purchase of trading stock. The net amount is the new van, 36,000 minus the allowance. So that's a check for, what's that? 36,000 minus 8,000 would be 28,000. So 28,000 has to be taken out of purchases. So I already have the purchases working, so I'll take out 28,000 out of there. All right, that's that working done. Now, question 3, the suspense account one. So just be careful with this. I've checked the marking schema. They have worked off the basis that it's 3, 4, and so on. So the working is right. So it says the suspense account figure arises as a result of the posting of an incorrect figure for mortgage interest. So we go up and we're told this figure is wrong, 2,500. They put it in the accounts as 2,500. It's incorrect. We try and work out what it is. So to do that, we have to work out the mortgage interest. So it's a 6.5% mortgage interest, including an increase of 60,000, 6.5% mortgage interest on the 1st of the 5th, 2016. So the way I did it was, I'm going to find 6.5% of 120,000, which is 180 minus 60. Right, now that's for 4 months. Okay, so it's 2,600. And then for the rest of the year, it's 180,000 by 8/12. So in total then that is 10,400. Now, this here 2,600 is for 4 months. Well, then what would it be for 3 months? Well, we can just find 3/4 of it. So that will give you 3 months. I did it a different way earlier. It doesn't really matter what way you do it. But if I find 3/4 of 2,600, that'll give you 1950. So this number of 2,500 should have been 1950. All right, and that's going to be just make a note of that, that's what we paid. I would change this number here, 2,500 to 1950 in my accounts. So there's a difference of 550 there. So in effect, we're taking 550 away from the mortgage interest here, which means the debit side is now 550 less than the credit. So to make it balance, suspense is included on the debit side. So to make it balance, we have to bring the insurance up by 550 to make it to continue to balance. So for my insurance, which started off as 9,300, I have to add on 550 euros to make it balance. So this has gone down by 550 on the debit side to 2,500. So the insurance goes up by 550 to compensate. Now, I would work out my mortgage interest due at that point, 10,400 minus 1950. So the amount paid was 1950, not the 26 and not the 25. Just so as I don't make a balls for later on. All right, and that's 8450. The second part then. So we've done the interest, and it says there's a discount allowed and of 400 entered only in the discount account. So the double entry for discount allowed is debit discount allowed and credit debtors. So you give a discount to your debtors. So the discount allowed reduces your debtors. They haven't put it in the debtors account. They've only put it in the discount allowed account. Discount allowed being an expense. So debtors has to go down by 400 euros. Excuse me. So debtors 51,250. And we are going to take away the 400. And that'll give you 58.50. There might be changes that later. If there is, I'll fix that. So now looking again back here in our debtors, if I mark that up, where are we? Debtors going down by 550 here. So now again, sorry, by 400 here, down to 58.50. This side is now 400 too small. So to make it balance, we have to add another 400 onto our insurance. And that gives us the 10,250. Okay. We're into a nice straightforward one then, our patents working. So patents incorporating 3 months investment income are to be written off over a 5-year period. Okay, so I would always do the investment income first on this. So we have 6% investments. So here 6% of 150,000, and we got the investments on the 1st of the 7th, so we only have them for 6 months. That's 4,500. The investment income due then is 4,500 minus whatever we've paid. So we know we've paid 3 months investment income. So it's 3/6 of the 4,500, or half of the 4,500, which will be 2,250. So at the moment there's a due of 2,250. I'm going to leave that just in, well, I'll put it for the time being. There's normally another change to it. This 2,250 then, it's this one here, not this answer over here. This 2,250 gets added to patents because it incorporates it. So to get rid of it, you have to add it on. So it's 48,000. And we have to add 2,250. That brings up to 52.50. And it tells us then that patents are being written off over a 5-year period. So patents written off will be 50 to 50 divided by 5. Which is 10,050. And then really importantly, you remember to take that away from your patents. To get you your 40,200. Okay. So that's working as in all three types of sole trader or of final accounts. You see it every question. Now, next one, a little bit tricky times. A new warehouse was purchased for 80,000 plus VAT. The amount paid to the vendor was entered in the buildings account. So they put in the 80,000 plus another 10,000, which is 12.5% of 80,000. So they shouldn't have. So they put in 90,000 into buildings. They should only ever have put 80,000. That never gets included in the asset or the expense or whatever. So it doesn't get included in buildings, doesn't get included in purchases, never anything of the sort. So if they have put in 90,000, they've put in 10,000 too much. So we go to our buildings. Buildings at cost are 540, which includes this 90,000. They've put in 10,000 too much. They put in 10,000. So you credit the 10,000 from buildings. You take it away. That brings you to the 530. Okay, now I'm going to probably need a couple of lines because I'm about to revalue buildings in a minute. So just let me just stick in a line or two here. Now, we took it out of buildings and we're putting it into VAT. So we have to debit it to VAT. So we look, VAT starts as 7,650 as a credit. And we're going to debit or take away 10,000. And VAT then is going to end up as 2,350 as a debit. So it's turning into being an asset rather than a liability. So it started as a liability of 7,650, but we are going to be like claim back 10,000. So that 10,000 is owed back to us. So now in effect we're owed in total 2,350. Okay, and that's that working sorted. So it's nice and quick actually, that one. It's one of the good ones. Okay, number 6, provide for depreciation on buildings at 2% per annum. So it's 2% of 530, this new figure. So that was the new figure. So that's 10,600. Now, you will either add this 10,600 to accumulated depreciation, or in this case, to the revaluation reserve. So it was decided to revalue buildings to 700,000. So we have to add on the revaluation surplus is what it's called. I wouldn't even bother doing this, just to show you. You go add on 170 and that brings you up to 700,000. So the revaluation reserve is 130,000. Add on the depreciation of buildings, 10,600 for the year. Then you must also add on any accumulated depreciation that exists. So go up to your buildings, and they cost 540. They're worth 496. So that is, what's that? 94,000. 90. Yeah, 94,000. So your revaluation surplus is the three of those added together. Which is 264. Am I wrong there? What is buildings? Sorry, so looking at the wrong number. I think 540 and 496 is 540 and 456. Is that 94,000? Add on the 130. Sorry, it's 170, isn't it? Sorry. That's the 274 600. Sorry, it's only 84,000. My God. Apologies, lads. It's terrible maths. Um, that's why you use calculators. I should probably a bit more often. Okay, so that's that one done. Um, I've done the revaluation. Yes, sorry, I'm just drawing myself here from the mistakes. Anyway, number 7, provide for mortgage interest due and investment income due 31st of 12, 2016. Um, yeah, we've done that already. We've done both of those, so they're fine. Number 8, goods withdrawn by Davy for private use for the retail value of 6,000, which is cost plus 25% were admitted from the books. So obviously we find the cost price. So let me just work that out there. So 6,000 divided by 125 multiplied by 100 gives you a cost price of 4,800. So that was withdrawn from, that's our drawings working. So we take it away from purchases. I'm going to add it to, we're going to add the 4,800 onto drawings. I don't know if there is drawings already. There was. So there's drawings 38.3. So we're going to add 4,800 onto it. If it wasn't there, you'd have to create drawings. And that gives you the 43.1. Then finally, no record has been made in goods in transit. Goods in transit that you actually own. This is one, by the way, it'd be the same process if I was asked an incomplete records. You would ignore the stock element of this. Sorry, you would ignore the purchases element, and you would only do stock and creditors, and it would automatically change purchases, like I showed you. Excuse me. Excuse me. For the other one. Anyway, so no record was made for in the books for goods in transit. The invoice for these arrived showing a recommended retail selling price of 7,000, which is cost plus 25%. So again, find the cost price. So 7,000 divided by 125 multiplied by 100. So the cost price is 5,600. We bought the goods. We own the goods. They just haven't arrived yet. They're in the warehouse. So we add that 5,600 to stock. We added the purchases because we own the goods. And we added to creditors. Okay, if that was goods in transit leaving our business, we would take the cost price from stock and we would add the selling price to sales and debtors. I don't know if that's ever been asked that way, but I'm sure you can work it out yourselves if you did. All right, so that is them all in. I'm just going to bear with me for a second and I'll do these calculations. To finish them all out. Sorry about this. You could actually be doing this as you're going. There's no reason why you couldn't. All the rest of them seem to be in. Okay, so we're at the point where we have to slot all these numbers in. So how would I do it? This is completely up to you, right? On this, I would take the numbers from the workings page, put all them in, tick them off in the question, and put all the balance in. If you know, that would be the process I would use. Some people like to start at the top, start at sales, and work their way down and make sure you've got everything in. The really important thing is just that you do get everything in. So every number from your workings page needs to go in. Every number that hasn't been changed as a result of a working needs to go in as well. So it's up to you lads with that, but I'm going to do it the way I would do it. So we start off, the first one is our closing stock, which we got to be 67.4. Now I know closing stock 67.4 is one of the ones that goes in twice. It goes in my closing stock and my current assets. Next one then for my workings page is my purchases, and that's my 644,300. I'll get that in. Okay, and we've got creditors 69.2. That would be my current liability. So I'll put that in my current liabilities. Creditors amount falling due. So that is 69.2. Delivery vans 110 is a fixed asset. So I'll get that in. You should call it delivery vans. Don't get caught up in giving things the wrong names. 110,000. The while I'm there, I'll just put in the accumulated depreciation as well. So 24,050. Oh, hold on. Sorry, let me plug this in. Okay. Sorry. That's delivery vans. The accumulated or the depreciation delivery vans 59 is an expense. So it's a selling and distribution expense. Try and get them in the right place if at all possible. I know I'm saying it's not that important, but it's the examiner will thank you for it. 10,600. Now, it is also important you put in all these headings. If you don't put them in, you get -1 mark for every administration, selling and distribution, other operating income you leave out. Okay, that's in most of the marketing schemes. So that's your delivery vans. Your accumulated depreciation is in. Your profit and loss, it's 2150. Anything to do with the van is selling and distribution. So loss on the sale is 2150. Is selling and distribution. If it's profit on sale, it's other operating income. Mortgage interest, 10.4. So that'll go in its own spot. Down here. And call it mortgage interest. Don't call it debenture interest. That's, again, I just copied that skeleton from a trading profit and loss account, so that was quite lazy. So it just goes in there. Mortgage interest due is a liability, as you know. So 8450 in your current liabilities. And we'll just keep on working down through this. Your insurance is an admin expense. You'll see there, lads. Everyone dishing out all these generous people giving their money. So we're up to about €1,000 raised from trying to raffle my tickets. So if anybody wants to give, don't be afraid to. So the insurance is what I say it was 10,250 or something. Yeah, 10,250. That's an admin. Okay. Where am I up to now? Sorry. Debtor is 5850. That is our current asset. Now, there's normally a bad debt provision. I don't think we changed the bad debt provision here, did we? So let me just check and see if there's a bad debt provision in the question. On the credit side. Yeah, 2,800, which we have to take away. Now, most questions obviously you have to adjust that, but this one was straightforward, so you didn't have to. So that's 48,050. Do always check for that when you're putting in debtors. Investment income 4.5. Uh, so investment income is 4,500. That goes in its normal spot. Investment income due, which I think that worked out. 2250. That is a. Where am I? Sorry. That is a current asset. That's the only problem with doing this way. You can get a little bit lost flicking between two pages. Maybe tick them off or highlight them as you finish it to make it easy to follow. Patents 40,200 is obviously a fixed asset. Then you've got patents written off, which is an expense. Quite important. You put it in patents into administration. What was it? 10,050. Right, the buildings then we revalue them to 700,000, which is grand. So land and building 700,000. Now they were revalued, so that's 700,000, and I can put in my revaluation reserve down into my finance buy immediately. So I think the revaluation reserve is 264 or something like that. Revaluation reserve 264,600. So that's just sort of a good habit that I'll put that in immediately. 264,600. Let's skip the depreciation and all that, but VAT has become an asset. 2,350 was a liability. It's now an asset. Next one then, depreciation of buildings is admin. 10.6. I think I've put in my revaluation reserve. Have and drawings is 43.1, and remember that's minus. So less drawings 43.1. Sorry, I put that in there. Put it in the wrong place. Jesus. Okay, so that's everything in from there. That just leaves us with everything from the question that we haven't put in already to go in. So we've got our sales, which is 8, that never changed, so it's 832,500. Purchases had changed. Opening stock 38.5. I'm going to do that sum now because they're finished with. Okay, so 217,100 is that. Commission, right now, commission's a debit balance, which makes it a selling expense. If it was credit, it would be other operating income. So commission is 15.1. Provision for bad debts is in. Salaries and general expenses is admin. That hadn't changed. 91,540. Discount allowed 510 is expense. You know it's an expense. Remember Axel. Okay. Rent now, credit, liability or earning, so it's obviously an earning, so it's rent received. Okay, we'll put them over here, third column. Oh, sorry, that's discount. Rent is underneath at 8.5. Okay, buildings is done, delivery vans is done, investments can go straight in, 150 into your balance sheet. The mortgage of 180, and don't call it a debenture, it's not. So 180, always the end figure. VAT we've done. PRSI is a liability. 5.1 could of course be an asset if it was on the other side. Bank is a liability. It's bank overdraft. It's on the right hand side. So on the left hand side, it'd be an asset. Drawings we've done. Capital is capital and reserves. 520, 500. Insurance, incorporating suspense we've done. Patents we've done. Debtors and creditors we've done. And mortgage interest paid was used to work out mortgage interest due. So we should be finished and hopefully it balances. Find out in a minute. Sorry. So 122 440 and I'll just keep adding them up. Obviously expenses are taken away from your gross profit. Add on your other operating incomes. Okay, like so. Right, add on your investment income. Take away your mortgage interest and you get 71 680. Don't know if that's right or not. Anyway, I need to know. I don't know. I'll check in a minute. There might be wrong. Anyway, obviously just for your own mocks, right? You have to have total easy oaks. So 810 24050. Total those two, and then it becomes right 155 plus the 850 plus the 4200. Don't add them. Just make sure not to add them twice. Sorry, that's wrong. Jesus. So it's 976150. Add up your current assets. Add up your current liabilities. Take them away from each other. And then add on your answer. Okay. Throw in your net profit. 71,680. I checked this beforehand. I'm pretty sure it's 60 something, so I'm gonna have to go back and see where I've gone wrong in the trade profit and loss. Add those up and then add that on, see if it balances. And it doesn't. No, good idea where I've gone wrong. So just give me 1 minute, I'll just pause this. I'll try and work out where I've gone wrong. Okay, so it's right as far as there. 122,440 is correct. This is wrong, so I've gone on. Okay, depreciation delivery events. I took the wrong number, so it's 59 for depreciation and delivery events. So sorry about that. Uh, took the wrong number. Yeah. So 66,380. Let's see if that one works. Yeah, it does. Now, if that happened in an exam, I would have lost marks for the correct figure only. So I would have got 117 out of 120 because I had the figure right in my working. So I wouldn't panic too much about it. But it's easy to if you should be able to find the mistake. It's never going to be in one of the things that it's in one of the workings. So it'll be generally when you make a mistake like that, it's a transfer over of a number. So it's always the first thing you check that you transferred them over correctly. Anyway, hope that was helpful for you lads. We'll see you tomorrow or see you Thursday. Now, just tonight and later on tonight, maybe if I get time, I got to do, I think it was the 2018, 2017 or 2018 service firm. Um, Gavin O'Shea was doing it earlier on, and he was showing me a couple of things that he was finding difficult. I might do it as a bit of revision, and I will also show you the 2019 question one depreciation working again, just to tidy that bit up. All right. Anyway, I'll talk to you later. I'll see you on Thursday. Well done.